Output represents one of the most important cost objects. There are two types of output: products and services. Products are goods produced by converting raw materials through the use of labor and indirect manufacturing resources, such as the manufacturing plant, land, and machinery. Televisions, hamburgers, automobiles, computers, clothes, and furniture are examples of products. Services are tasks or activities performed for a customer or an activity performed by a customer using an organization's products or facilities. Medical care, teaching, dental care, spa activities, insurance coverage, and accounting are examples of service activities performed for customers. Car rental, video rental, and skiing are examples of services where the customer uses an organization's products or facilities. So when we're trying to determine if something is a service or a product, there are a couple ways to go about it. Services are intangible, meaning they don't physically exist. So if we're to think about a service profession, since we're talking about accounting, we'll use a CPA firm. A CPA or an attorney sells their services. These aren't in inventory and therefore don't appear on the balance sheet of the company. When a attorney performs a service, they bill a client, and that's how they generate revenue. And if you compare that to, say, a manufacturing company producing automobiles, they're producing automobiles, they have that in inventory and can sell it later on, whereas services can only be sold as they occur. Product costs are those costs, both direct and indirect, of producing a product in a manufacturing firm or of acquiring a product in a merchandising firm and preparing it for sale. Therefore, only costs in the production section of the value chain are included in production costs. When we start looking at income statements, the business case examples we're going to be looking at are for blue jean manufacturers. So if we think about the product costs involved in manufacturing jeans, the largest is materials. The cost of the material to make the blue jeans is initially added to the inventory account and remains in inventory until they are sold. When they're sold, the cost for the material is then transferred to the cost of goods sold. Product costs are classified as direct materials, direct labor, and manufacturing overhead. Direct materials are materials that are part of a final product and can be traced to the goods being produced. So if we think about our blue jeans example, we have the cost of the jean material, you have the zipper, we have thread. These are all a physical part of the pair of jeans being sold, and therefore they are direct materials. Direct labor refers to the labor that can be directly traced to the goods being produced. In the case of the pair of blue jeans, we know about how long it takes a tailor or seamstress to produce that pair of jeans, and they are employees that convert the direct material of the fabric into the product. And therefore, their time spent on that activity can be classified as direct labor. In the last lecture, we talked about indirect costs, and that's what manufacturing overhead is all about. So if I'm Levi Strauss making blue jeans, it's wherever those jeans are created, that's my factory, and the cost for that factory is considered manufacturing overhead. It's not directly attributable to a specific pair of jeans that I produce. Factoring costs for the physical plant include janitorial services needed to maintain it, supervision of the plant itself, any security services, the cost to catalog and maintain our inventory, utilities, property taxes, and depreciation. In the next lecture, we're going to look at calculating the cost of goods manufactured.